Thanks for joining us today. Kevin Dover Spikes talking real estate. I'm here with one of my good buddies in the industry, Ryan Purpero with U.S. Bank. Ryan's been and I've been doing business for well over 10 years now. Ryan, give us a little bit about yourself. We're going to talk today about a 10% loan, but give us a little bit of input about yourself.
Yeah, so Ryan Purpero, U.S. Bank Home Mortgage, been serving Orange County and surrounding areas for a little over 18 years. Been working with Kev, obviously, over 10 years. Been working with RE/MAX for about the same. And, really excited about 2020 with the beautiful rates we have. And
unbelievable rates. Rates right now, 3.5 and under.
Incredible.
Get some other stuff. So we're going to talk about a 10% loan here today and the process that also is involved with doing that. But Ryan, after I find somebody that's interested in getting a loan, we need to get them pre-approved. You can't be buying a property without being pre-approved. You can. Most people won't accept an offer unless you've gotten your pre-approval as to what you can afford to do. So if I in turn am bringing a buyer to you, they don't have the 20% down. What are the other options out there?
Yeah. Well, they may or may not have the 20% down, but what we have at the bank is a specific, portfolio loan.
Okay.
Portfolio loan means that it's not being sold off to an end user. Essentially, we are the end user. I think I mentioned earlier that, 70% of loans typically are sold to Fannie and Freddie, which is the government.
Yep.
But this is a particular portfolio loan that allows us to offer financing for people up to $1 million with 10% down. Typically, you'd find that you'd have additional expenses such as mortgage insurance. Mortgage insurance is an additional expense.
Right.
In $1 million loan, you'd be paying about $400 to $500, maybe even $600, depending upon credit profile.
Right.
And that could be an additional expense, which is actually not tax deductible if you're making over $100,000.
Also, if it's at $600, you're talking about $7,200 annually.
Absolutely.
That's a lot of money.
Another, typically when you put less than 10% down, you're subject to maybe a second mortgage.
Right.
And that can be, a little bit more cumbersome, having to pay two payments, and depending on the lender, higher rates, higher payments. But we'll do one loan without mortgage insurance at a going rate of, 3.5 to 3.625 on a 30 years fix, without mortgage insurance, without a second mortgage, without additional expenses. So it gives someone the opportunity that may not be able to get into $1 million house. They make great money. They've saved, 150, got a good retirement. They don't have that traditional 20%. Just as long as they qualify under other, qualifying factors, we will write.
But even if they had 20% down and it was a property, it was $1 million property, they're putting $100,000 down, but they had the 20%. They have another $100,000. They can do improvements. They can add. They could redo the kitchen. They could redo the bathrooms, and then not have to take a loan out. They could do it cash out. So
that's my point. We have some absolutely brand new communities in Irvine, but we have a lot of properties in Woodbridge that are beautiful properties, have great bones. They have the bed bath count that the client's looking for. They have the square foot. They got the great backyard size, but it's a little dated. So
yep.
I have people, instead of just saying that's not for us.
Dated.
Yeah.
He means ugly.
Well, the shag carpet's not really working too well in 2020.
That harvest gold shag carpet is not in
it needs to be harvested
right
out of the ground and taken out.
Look a little bit more luxury vinyl plank today than the shag carpet.
Yeah, so instead of putting down 20 in the house, I have clients putting down 10% and taking their cash reserves that they would have traditionally put down and making the property their own and kind of doing the renovations up front. So whether you've saved, the traditional or you want to walk right in and do upgrades, it's a beautiful product to be able to serve both those needs. So
yeah, that gives you some options there where not everybody has that. Especially if you're talking about going through a broker with a direct lender, they have the ability to do portfolio loans that give you options. So you've got the doctor. I think we've done a video on the doctor loan too. You can look that up if you have any information you want to gather from that one. You can look that one up on our podcast also. But so I get you somebody, Ryan. We in turn going to start this. The loan process starts where?
The loan process starts really with the phone call. It's the introduction, getting to know the client and finding out, short-term goals and long-term goals. And then we start gathering actual documentation about their employment.
Full doc.
Yeah, we do full doc loans at U.S. Bank, meaning we review 2-year history of income. We look at 60 to 90 days of assets. We look at retirement assets as well as savings and checking and stocks and things of this nature. We do a full credit report so we can establish what we call a debt ratio, showing what type of monthly obligations we have going out versus our income.
Right.
That way we do a full pre-approval. Some people will literally write a pre-approval letter with just a quick conversation.
I've had many pre-approval letters that don't mean anything because the buyer's agent that came in with the buyer didn't really know what the loan process was about and what needs to happen and why you want to have a very qualified lender to work with. I had one particular buyer that came in with their agent, and I did cross approval, which I do on all my properties that I'm listed on, and found out that this guy had just done a loan on a property that was his primary residence. He was going to buy this one as his primary residence. And so in order for him to qualify on that one, he had to redo his other loan because it wasn't going to be his primary residence anymore. Yeah. It was less than a year. And he just didn't understand that. Neither did his agent. We ended up falling out of escrow with those folks and went to somebody else. But that agent kept coming back with 5 other approvals. They didn't walk through the process. So it's important that you're working with someone like yourself. So once we get all that documentation, they've got a pre-approval. I, in turn, now have gotten them into a property escrow. We, in turn, open up escrow. I hand it over to you. What are you going to do?
First thing we do is lock the rate. Rates change daily and sometimes intradaily. If there's big market swings, we'll see that rates could go up or down middle of the day sometimes.
Right.
So may open up with, at 7 a.m. with great rates and things actually deteriorate. And the bank will actually midday change the rates. So we want to solidify the rate. We want to take that bird in the hand. We don't want to be gambling with hundreds of thousands of dollars here because
right.
1/8% can cost you thousands of dollars over, the long term.
When's the appraisal get ordered?
We do same day. So as soon as we lock the rate, we have the purchase contract. The appraisal order goes out. We typically make the listing agent the point of contact unless otherwise specified.
Right.
And we have the appraiser head out there, and they are a third party. They are not. They don't care what the house comes in at in terms of. They're not going to try to make a deal work. They're going to give a fair market evaluation, right. And that's what you want. It's a neutral, price opinion. Opinion price, I should say. But one thing that is important is, once you enter escrow, you really don't want to buy anything new. Right. I wanted just to share a quick story. I pre-approved a gentleman, and he was well-qualified individual, great income, great assets, great credit. The pre-approval was done 2 months ago, and we get into escrow, and he buys a Tesla midstream there.
We got a problem.
So Teslas are beautiful cars, but the payments aren't necessarily beautiful. In the teens, thousands of dollars, $1,500 or $1,600. So
Nassau, we've got a problem here. What are we going to do?
Yeah, luckily we were able to move some things around, and we got the debt ratio in line. But it was really important to really tell people up front in the home buying process, don't take on any new debts or credits. But
but this 10% is pretty good deal when you start looking at it, because you don't have to buy $1 million home. This is down to any other purchase price that you can do under $1 million. So there gives you another option to be able to do some of the upgrades. So in some cases the houses are not turnkey, so you can take that money and not have to worry about it. But so we're now in the process. We've now gotten loan approval after you've done conditions and stuff. What's your time frame for a loan approval?
The contract specifies 21 days.
Right. We always shorten it down.
Yeah, we typically shorten it down to make our buyers a little more competitive.
Right.
But my rule of thumb, and this obviously changes daily with our loan velocity.
You have a lot of rules,
Well, you got to be very specific. Very specific.
Yes, you do.
But I tell people a week. If I lock you on a Monday, I'll have you approved by the next Monday, and I'll have that appraisal in hand.
And you have been living up to that. That's been very consistent over the last few years. We did have problems with the institutions not having all the people in place to be able to make that happen. That's not an issue now, and we're able to see those done. So we're talking now 21 days. You got the loan approval within 10 days. We in turn then are looking to do what? What's the next process that we do?
Loan approvals are always conditional approvals. They'll have, borrower, requests, meaning, hey, we might need another bank statement.
Conditional approvals is one of those things that you have to go through these little bits and pieces of the loan, and even up to the last minute that someone's going to call and verify your employment.
Yeah, we verify employment with the HR at the borrower's institution of employment. We make sure that we have all the information pertaining to salaries and variable pays, and we make sure that the numbers are in line with what's been submitted.
Right.
We also check with what's been filed for taxes. We do collect tax returns,
right,
but we request a 4506T. We're getting tax returns, tax transcripts, I should say, directly from the IRS themselves. Correct. To make sure that all the information provided is, again, in line with what has actually been filed. So we're verifying a lot of things in the background while we're also working with you to maybe get letters of explanation or, again, additional documentation. But there's a lot of different things that happen with the client and in the background. But we want to have those all cleared, and have this really wrapped up within about 20 days, so we can send out the closing disclosure.
The CD.
Yeah, the closing disclosure is kind of the final figures of all the costs and credits and fees that are related.
That takes, once that's sent out, that's 72 hours. It's basically like a cooling off period as to what's going on. But, when we're in the CD, we've already got contingencies removed. The buyer is going to be buying this property. We're not seeing a lot of things that are out of whack with the CDs.
No.
So we're going to end up getting that done. So then we're talking about the next thing we're talking about is funding this loan.
Yeah, but once we have the CD out, the 72 hours is up. We want to send out the legal loan docs. Notary Public from the state of California comes out, verifies identity with a nice thumbprint as well as government form identification. Make sure this is actually Mr. and Mrs. Smith, and we sign all the legal loan docs, and we wait. We usually fund same day. Yep. So we send the wire with our loan docs, and then we just have to record the lien.
So we're looking for that special part of my business today is that we're going to get a call from escrow that this property is confirmed in my favorite part of the day, to make that phone call to the buyer to say that we are confirmed. And then when can I get you the keys? And that's what we're looking for. So, Ryan, again, I appreciate you coming by and spending some time with me today on this 10% loan. If you need any additional information, we'll have some stuff in the show notes. Don't be afraid to give me a call, and we'll figure out how to get you in touch with Ryan and go from there. Thanks for joining me again today.
Yeah, Kev. Thanks for having me.
Thanks for watching and listening. Don't forget to like and subscribe.